Smart money concepts can save traders time, but drawing them manually takes effort. Some indicators promise to do it automatically. Are they helpful or just clutter? Today, we'll test one. The Price Action Toolkit by Flux Charts, starting with everything off and adding features step by step to see what's really useful. Feature 1. Market Structure. Let's begin with the basics. This is how we understand and read price movement on a chart. There are two main ideas you need to know: break of structure and change of character. In an uptrend, if the price goes above the last swing high, that's a break of structure. A break of structure usually means the trend is still going in the same direction. But if the price drops below the last swing low, that's a change of character. A change of character often means the trend might be reversing. I've made a full video on how I mark market structure and swings. You can see it in the top right corner. Now, when I turn this feature on, watch the chart. The indicator will automatically show breaks of structure and changes of character for you. But the default settings might not match the way you do it by hand. That's why there's a swing length setting. By adjusting it, you can make the results closer to your own analysis. Now let's talk about feature 2. Order blocks. I'll turn them on so you can see how they look on the chart. Right away, you'll notice multiple order blocks appear. A bullish order block is the last bearish candle before a strong move up. A bearish order block is the last bullish candle before a strong move down. This definition means not every potential order block will be marked, only the ones that meet the rules. The highlighted zones become our points of interest POIS, areas where we expect the price to react. When the price revisits an order block, we watch for a possible rejection. That's often where trade setups can form. This indicator takes a unique approach. It only displays order blocks confirmed by both market structure and volume. This helps filter out weak zones and keeps the chart cleaner. Of course, proper backtesting is still essential to see how well these setups perform. And before entering a trade, it's always smart to check for confirmation on a lower time frame. Next, let's look at feature 3. Breaker blocks. So, what exactly is a breaker block? It's a previous order block that failed to reject the price. In simple terms, support turns into resistance, or resistance turns into support. This creates a new point of interest POI on the chart. When the price taps into a breaker block, we look for a rejection in the opposite direction. Most of the time, that signals a continuation of the new trend. If you look at the chart now, you'll see the indicator marking these failed order blocks. It highlights them as breaker block zones, making it easier to spot where a shift in market structure has occurred. Just like order blocks, these require proper backtesting to measure their win rate. They won't always trigger a reaction, but when they do, the setups can be high probability. The next feature is fair value gaps. Let's turn them on and see how they look on the chart. Right away, you'll notice the indicator marks the latest fair value gaps without making the chart too cluttered. If we change the time frame, it automatically updates and shows the gaps for that time frame. There's also a very useful option to display higher time frame gaps alongside your current chart. For example, here I'm on the 1-minute chart, but I've also added 15-minute fair value gaps. This gives you a clearer view of higher time frame imbalances while trading on a lower time frame. In the settings, you can adjust the sensitivity. Higher sensitivity will filter out smaller gaps and only show the larger ones. You can also choose how the gaps are detected: same color candles or mixed color candles. If you select same color candles, it will filter out more gaps. Mixed color detection can be useful if you're backtesting different scenarios. Overall, this indicator does a great job of marking fair value gaps automatically. And with just a few tweaks in the settings, you can customize them exactly how you want. Next, let's talk about the next two features of liquidity levels: equal highs and equal lows, and how they connect to buy-side and sell-side liquidity. Equal highs and lows form when price reacts at the same level more than once. These areas attract attention because many traders watch them, and that often makes them prime spots for liquidity sweeps or manipulation. The toolkit automatically marks these zones for you, and if you increase the ATR multiplier, It will even pick up more variations to highlight additional liquidity zones. On top of that, the indicator plots buy-side liquidity and sell-side liquidity, areas where clusters of buy or sell orders tend to build up. You can fine-tune how these levels are detected with the pivot length setting. Shorter lengths give you more frequent nearby levels, while higher lengths highlight fewer but more significant zones further away. You can also adjust the zone width and add labels for clarity. Together, equal highs, equal lows, and liquidity levels give you a clear picture of where stop hunts and reversals are most likely to occur, saving you time and keeping your chart organized. Let's look at a bullish example and how you can plan ideas as a trader from these features. The market is clearly in an uptrend, so we're only interested in buying. But we can't just buy at the current price. It's already too high. What we need is a pullback that gives us a better entry. The red candle before the strong rally marks our range and acts as a potential bullish order block. If price retraces here, it creates a high probability setup for a long trade. But remember, price doesn't always bounce cleanly from a marked zone. When many traders are watching the same level, the chance of a liquidity grab increases. That's why patience matters. We wait for price to return to the zone, then shift to a lower time frame for confirmation. There, we might see a double bottom forming. Price attempts to break lower twice, but fails, showing bearish weakness and drawing in more buyers. Liquidity builds below those equal lows, and smart money often wicks beneath them first, collecting stops, grabbing liquidity, and then driving price higher. When this liquidity grab lines up with bullish order blocks, structure, and other smart money concepts, it often sparks a strong upside move. We've covered some solid features today. If you want a deeper look, FluxCharts has clear documentation on the Price Action Toolkit. Honestly, it's one of the cleaner tools I've seen for spotting smart money concepts automatically. But here's the real question. Is it worth using for your trading? Have you tried similar tools? Share your thoughts and trading stories in the comments. I always enjoy going through them. The Price Action Toolkit is a paid indicator, but there's a 15% discount with the code POORTRADE. Links in the description. As always, check the reviews, do your homework, and see if it fits your style. Thanks for watching. If you found this helpful, hit like, and I'll see you in the next one.